Good evening. Today we will see the post-market report dated 16th May 2022, and the agenda for today is to analyze Nifty 50 and Nifty Bank updates, the top 5 gainers and the losers, and the corporate news. So starting with Nifty 50 market, we have the previous closing price as rupees 15,782.15, the opening price with rupees 15,845.10, the high price with rupees 15,977.95, and the low price with rupees 15,739.65. In the contrast, we have Nifty Bank with the previous closing price as rupees 33,121.35, the opening price with rupees 33,256, the high price with rupees 33,821.65, and the low price with rupees 33,001.75. So next we shall see the top 5 gainers in the Nifty 50 market, that are as follows. First is Ica Motors, Apollo Hospital, UPL, NTPC Limited, and the SBI. For the top 5 losers in the Nifty 50 market, we have Ultratech Cement, Shree Cement, Asian Paint, ITC Limited, and Grasim Industries Limited. Now coming to the corporate news, we have Adani Group stocks rise on $10.6 billion Holcim deal. The deal is the largest for the coal to media conglomerate and marked the group's foray into the cement sector. The Adani Group will acquire Holcim Lafarge 63.2% stake in Ambuja Cements and 54.53% stake, of which Ambuja Cement holds 50.05% in ACC. The reason for Adani Group Holcim acquisition are as follows. First, cement is the key raw material for all kinds of infrastructure development, and with rapid urbanization, affordable housing projects, recovery in construction, and other infrastructure projects, cement companies are likely to flourish in the coming years. Second, Ambuja and ACC are the strongest cement players with pan-India presence and operations. It could be easier for Adani Group to establish its presence in the cement industry through this acquisition. Third, Adani Group acquisition will help Ambuja and ACC as well. They are likely to benefit from synergies with Adani Group, which could result in high margins and cost efficiencies. Now coming to the second news, Pradeep Phosphates IPO opens tomorrow. Pradeep Phosphates Limited, India's second largest manufacturer of non-urea fertilizers and de-ammonium phosphates in the private sector, will launch its maiden public offer on May 17. Some key things to note before subscribing to the public issues are as follows. Number 1, the price band. The price band for the offer has been fixed between rupees 39 to 42 per equity share of face value of rupees 10 each. Next, objective of the issue. The company intends to utilize the net proceeds from the fresh issue to part finance the acquisition of the manufacturing facility in Goa. The company will not get any proceeds from the OFS portion, the proceeds of which will entirely go to the promoters. Third, lot sizes. Investors can bid for a minimum lot size of 350 shares and in multiples thereof. The minimum investment for a retail investor works out to rupees 14,700 at the upper end of the price band. A retail investor can apply for up to 13 lots or 4,500 shares for an amount of rupees 1,91,100. Strength and business strategy. The company is well positioned to capture the advantage of favorable government regulations in favor of Indian fertilizers industry. It has been able to draw raw material efficiency through backward integration of facilities and effective sourcing. Number 3, payment to file for new license for general insurance. The digital payment and financial service company PayTM has said that it will seek a new general insurance license with a fresh application aimed at gaining majority shareholding with a 74% upfront equity stake. The reasons for that are basically the potential. The company reiterated its intention to make inroads in the general insurance sector as it is extremely bullish about its potential. Thank you for listening, and you can contact us from the details mentioned below. And thank you for watching. Please subscribe, like, and share the video. That's all for today.